Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily NVIDIA report for Friday, September 5th, 2025. Let's take a look at the chart, big picture. Just to backtrack a little bit, about a month ago, we closed above this 2.5-year channel top that set up a long-term buy signal, and then the very following week, we fell back below it. We've pretty much been below it ever since, but we pushed through it on an intra-week basis, but we are holding below it, and that failure to follow through on a classic buy signal is in itself a sign of weakness. All the while, the NASDAQ 100 and Triple Q have been holding their 2.5-year channel tops nicely. Because of that, we are inclined to consider playing the short side. In fact, that is, by a degree, our recommendation, to be short now until or unless we can push back above, and the final straw would be a settlement above 182.70. We may amend that in the coming week or so, depending on what's happening on the charts. But 182.70 is the high settlement price that was put out a month ago. It would obviously be back above the 180.57 2.5-year channel structure. And there is also this channel bottom on the daily chart that we've used as a pivot point as well, that we settled below last Friday. It really is, what would you say this is, like a 4-point range of resistance that begins at 178.73 and ends at 182.70. This is your short sale zone as we move into October, and below which 149.18 remains, I'm going to use the word attainable, over the next 3 to 5 weeks. That becomes expected if we close today, that is the week itself, below 168.79. This is the final shoe to drop on the 4 feet that we have. I've been using the shoe to drop. This should be two comparisons, but I've gone through a list of qualifications for this weakness, and this is the last one, and that is a horizontal structure on the daily chart. It's performed pretty well this week in containing daily selling pressures. I mean, Monday we broke through it pretty well, but we certainly closed above it. And we're just above it right now. So, if we break 168.79 today, and this is kind of our intraday analysis, 164.64 is likely, or at least attainable. And if we close today below 168.79, 149.18 is then looking like the 3 to 5 week objective we think the market is skewing towards anyway. The question really is, if we hold above 168.79, we can rally back into the upper 170s by the end of next week. That's certainly possible, but closing below 168.79 does set up 149.18 as a 3 to 5 week target. I think 149.18 is in reach over the next couple of months anyway, holding below this long-term resistance 178.73 that ends at 182.70. And you've got the channel structure inside of all that at 180.57. So we'll probably clean this area up a little bit next week, but it really comes down to 178.73 to 182.70. That is our range of resistance that, if settled above, should result in 219 within 2 to 3 months. But until then, that is the area we need to take out. And if we do take it out, if we do rally and close above this zone, this 182.70 level, that will also involve, I'm quite sure by now, a settlement in the Triple Q above its own 2.5-year channel top.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity. Try it all free for 5 days. Cancel at any time.
And so we'll be watching this, of course, on a day-by-day basis. Let's get back to, really the day itself. I do have 3/8 upside Fibonacci over the last week at 173.81. It can contain intraday buying pressures, possibly for the day itself. If we close above 173.81, that does signal within several days 178.73, that 5-month channel bottom, part of a range up to 182.70 that's actually narrowing daily, which makes it a little more convenient to trade. 178.73, the beginning of a range up to 182.70 that can contain buying through October, and below which 149.18 in reach by the end of October, and quite possibly by the end of September if we settle today below the 168.79 level. We have a down pivot at 168.79. So if you're wondering whether you should go short or you're wanting to go short, I think your next real clear sign would be a settlement below 168.79. Until then, we could see a rally next week into this 178.73 to 182.70 region. That would be confirmed with a settlement today above 173.81. So closing today above 173.81 closes the gap. It's also a settlement above the high of the low that was put out on Tuesday. And we've been above 168.79 all the while. So 168.79 we've been mentioning is just a kind of a near-term support that, if settled below, would be the clear-cut indication for 149.18 probably by the end of September. Until then, you must allow for upward retracement back into the upper 170s, the low 180s, closing today above 173.89, sets up 178.73 for a Monday-Tuesday test. That 178.73 formation, the beginning of a zone up to 182.70 that can contain buying once again through October, and if settled above, is a complete reversal to the upside. As I just said a moment ago, I do think at this stage, closing above 182.70, it is very likely we will also close in the triple Q and NASDAQ 100 above their respective 2.5-year channel tops. I think that pretty much rounds it out. I hope that all made sense. I am going to leave it at that for Friday's daily. I was going to say daily triple Q, but because I'm looking at that chart, Friday's NVIDIA report. And we'll be back, of course, with Mondays. And you have a fabulous weekend.